Everyday Equity. Let's discuss home buying after a significant derogatory credit event. A bankruptcy, foreclosure, or short sale can have long-term impacts on your credit. The presence of these items on a credit report can increase the level of risk associated with a loan. Lenders must review the cause, time since the event, and determine if you have an acceptable credit history established. Today, we're going to focus on the timing aspect of when investors allow a borrower to apply for a new mortgage loan. First, we'll briefly break down the different credit events. Foreclosure is a legal process by which a lender takes ownership of a mortgage property and sells it to recover the amount owed on a defaulted loan. Default is triggered when a borrower misses a specific number of monthly payments. Short sale is an offer to purchase a property for less than the amount due on the current mortgage. Short sales are typically completed by a homeowner who needs to sell before the lender takes control of the property in foreclosure. Lenders must approve the short sale in advance. Chapter 7 bankruptcy liquidates non-exempt possessions or any assets to pay creditors before discharging the remaining debt. Chapter 13 bankruptcy allows for the restructuring of debt to create a repayment plan, so the courts can supervise payments and allow debtors to keep their assets, such as their home or their car. Now let's dive into timing for different loan programs. If a borrower is applying for a conventional loan and they have a foreclosure on their credit history, they generally need to wait 7 years from the completion date. A short sale requires a 4-year waiting period. In bankruptcy cases, Chapter 7 has a 4-year waiting period from the discharge or dismissal, while Chapter 13 is 2 years from discharge or 4 years from dismissal. For an FHA loan, a foreclosure and short sale both have a waiting period of 3 years from the completion. If the borrower previously filed for Chapter 7 bankruptcy, the waiting period is 2 years from discharge. If they filed for Chapter 13, they must be able to show a year of satisfactory payments on their payment plan. The court must also grant permission for the borrower to get a mortgage loan. If a Chapter 13 bankruptcy has been discharged, there's no waiting period on a government loan. This includes VA and USDA loans as well. USDA has a waiting period of 3 years from completion or discharge on foreclosure, short sale, and Chapter 7 bankruptcy. Chapter 13 bankruptcy requires a year of satisfactory payments and court approval. On VA loans, foreclosure and Chapter 7 bankruptcies require 2 years from the discharge date. Chapter 13 bankruptcy has the same guidelines as the other government loans. The borrower must be making satisfactory payments and have court permission. Short sales have specific requirements for credit depending on if the borrower was current on their previous loan at the time of the short sale. This is something a mortgage specialist can cover in greater detail. All programs have certain credit exemptions and the possibility of underwriter review for extenuating circumstances that can shorten the waiting periods for buying after a derogatory credit event. These situations do cause significant impact to credit history and risk, but doesn't mean that they have to prevent you from owning a home in the future. Reach out today to see the steps that may be involved for you and your family to purchase your dream home. Thank you for joining us. Don't forget to like this video, subscribe to our channel, and turn on our post notifications to never miss a new video. Please leave a comment below if this video was helpful and if you'd like to see more videos on similar topics.